Good morning, good evening, and good afternoon. Welcome to another technical analysis looking at GDP, which is called Goodrich Petroleum Corp, which engages in the exploration, development, and production of oil and natural gas on properties. So this would be like working in, let's say, New Hampshire, and they find out your land actually has an oil deposit. So what they would do is they would explore it, and first they would find out how much oil is in there, and then they might personally begin getting the oil out of your land. And they actually operate in shale production in the northwestern Louisiana, northeast Texas, and the Eagle Ford Shale in South Texas and in Tuscaloosa Marine. So, actually being based in Houston, Texas, you could see that this company might have been actually hit by the recent downturn from the hurricanes that hit the coast. And with a market cap of over 108 million and a price to earning ratio of 0.26 and with shares outstanding of 10.54 million, we see that this stock might be currently undervalued based off of looking at the technicals as well as the fundamentals. And the average volume for this stock is actually very low. It's around 35,000. So this stock trades very lightly. So any positive news could really shake things up, given how much public float is available in relation to how much the actual stock is worth. And its major competitors include PSHIF, which is called Petro Sale Incorporated. Another one is called PSK, which is called Prairie Sky Royalty Ltd, and as well as PSTRQ, Post Rock Energy Corp. And its biggest competitor is also PSSS, Pursuant Industries Incorporated. Now, most of these stocks have been down for over its last year time frame, except for PSSS, which has actually had a spike. Now, going to the XLE, which is the ETF for the energy, we see that it has hit a bottom at around 61.8 and has skyrocketed to almost $70. That's almost a 10-point move from the middle to end of August up until October. So we see that could be due to a lot of things, and we already know it's going to be related to the price of crude. So we go into the price of crude, we see that oil has bottomed around the same time, well actually before that, first oil bottom around in June, and has been going uptrend since, finally hitting over $50 per barrel. Now going back to GDP, what does that all mean for GDP? Well, that means in a rising oil environment, this oil exploration and petroleum that extractor can really be able to finally have a leg up and finally get a return that has been losing as the price of oil had tumbled throughout the last year. Now, let's look at to see a long-term analysis as well as short-term trend of the overall movement of GDP. Now, let's start with the 1-year daily time frame, meaning each candle represents 1 day. Quick thing to do, we already had talked about last time, is we can use the power of Fibonacci retracements to draw an easy to read and easy to understand chart analysis of looking at the support versus the resistance of the stock. Now we're going to do it from the left to the right, and remember the drawing tool, you go to right here, your drawing tools, and you're going to see this. Highlight over it is Fibonacci retracement. It looks like a percentage sign. And we draw it from the high of a year ago, which would be, that would be last April to now, year to date. We see that the stock has really taken a real big move downward to from 17 to 8.2, which had bottomed around September 1st. So the beginning of September, we really saw a bottom in crude exploration as well as retracement of the stock overall. So 8.2 is the key level to keep in mind for this stock. This is where the stock had began its reversal with an actual bearish hammer. So even though this was actually red, it somehow gave us a buy indication because we finally saw the trend starting to uplift off the low. And you can see here, looking at kurtosis, there was a huge spike in volatility. And not just volatility, it's unpronounced volatility. It's volatility that the market itself wasn't able to identify. And because of that big spike, it actually led the stock to rise off the bottom. And given that the average volume is very low, we can see here, looking at this blue bar right here, we see that as the volume, shows that the chart had actually had a big increase in buying inflow of the stock, which actually really led to a bigger increase in upward movement off its bottom around 8.2. So let's look at the trend. We see let's move this to 8.2 because remember, we want to be accurate. Every little slight movement that you do actually changes where the Fibonacci will retrace and set the points. So 8.2 seems to be the bottom. Okay, great. So now we see 10.34, which is about 10.35 being the next leg up that it needs to break through. So let's keep that in mind. So the stock on Monday should, if we get continued upward momentum due to the strength of oil sector, we can see this break through the next level of 10.35 as well as the next level of 11.66. And based off this, you could kind of round about and you could see, well, maybe 11.6 is actually better because we see the candles line up right here, and right here. So they jump a little bit below the 11.65. So we want to keep that in mind. And the next level is 12.73, 12.75. We haven't seen that level since about the beginning of August actually. So we actually have those levels in about channel trading from May all the way to July. So it pretty much stayed in this range of 1375 to 1165 within that 3-month time frame. So that was about a 2-point spread in the stock, which is important to keep in mind when we're looking at the trend and the overall analysis. Now, we could actually do, based off of this, we could start drawing our own support lines to help reinstate what's already been there. And we see here that 9.45, let's see, kind of like the 9.5, yeah, 9.5 seems to be a really steady place for the stock to go higher. And we are going to put since this is already red, let's just use light yellow to indicate that is an extra resistance line, support line that we're looking to see if the stock will not go below. And remember, we use our price level to find the stock, not the other tool that I was using. But look, so looking back at that, we see 9.5 is a big key level for the stock to hold below. Now, what's a closer level that we can really track to see and find an entry and stock it if we're really bullish on the stock? Let's see that we think the stock is going to pull back a little bit, but overall we're still believing the trend, which is the stock will continue higher. Well, where do we find the trend line? We could set one at 995. And although we could set it 10 and be cute, I think 995 is a lot more technical support line. So let's draw it at 9.95. And that'll be our next level that we want to see the stock dip below if we wanted to get long or if we were trying to short the stock. That would be our first key level of where we're trying to see the stock go below. So let's see. We're going to extend the drawing to the left. We're going to edit the properties. We're going to turn it yellow because we want to show the support lines as being yellow, and we could show the price on the right. So now we know a price target. And let's move this. Let's also extend this to the right, and we can actually, there we go. So we know 9.5 is a key level of support, as well as 995 for a most recent support. Now, let's see. Let's find another longer term support trend. Remember, these are already drawing us the resistance lines, as well as this would be our long-term support line. So, let's see, 930, let's see. 930 looks to be a good area to where we can set a longer-term support line for the stock. And we're going to be using yellow. Okay, great. So, you see here, extend to the left, we got the stock at 930 is where we expect to see another pullback. So we have a slight pullback to 995, another pullback to 950, and then if we see a bigger drop to 930. Now, well, Eric, where's going to be the next drop we're going to look for? Well, we're going to look for $9 flat. I think $9 flat is a good area where it hits at least a good amount of candles that we could say the stock will could possibly retrace to in the future if we see the price of oil as well as the price of oil exploration and the demand for oil drop. That's important to keep in mind when we're looking at this. So we would look at the crude inventories, which come out every Wednesday, to help us give an identification of whether or not we want to, go short or long the position, as well as looking at our MTTS trading system, which we had seen had us a spike in volatility in recent September above the zero line, where anything above the zero line shows there's a big spike in volatility. Now, anything that's below a negative divergence just shows that there's actually less volatility than was even predicted in the market. So that's important to keep in mind. Anything that spikes, there's usually an increase in volatility, which, based off of the candle, in this case was a green candle, we see there was a spike. However, if it was red, that could indicate that it's actually going to be a sell-off. See how this MTTS kurtosis system works is it just tries to measure the volatility, which is not priced into the market. So it's very important to keep in mind when we're looking at these charts and how are we really identifying what's really going on. And see, well, put price on the right, so we just have it all that's entitled. Okay, now, Eric, what's the last term of support? I think the stock is going below $9. Well, where do I draw the next support line? That's a great question. The next support line, I would say, based off of the candles and seeing this level of support, would be 875. 875. And we're going to put this on the right. We're going to keep this yellow. And let's make the width 2, because we think this is the price that it's not going to go below. So we want to really keep this as a key level to understand that if the stock does go below this level, we will see 875 be a major support. And finally, we could even draw one at 850 if we had wanted to. Let's just draw one at 850, because that's also another level of key support. And how am I getting these levels of support? Remember, we're going to look at 3 candles. We need at least 3 candles for all measured moves. So we want to find at least 3 times that it hits that price level, because we are psychological traders. As being in the market, humans naturally respond to different levels of price and they react to it, and that's really what gives it its value. So without that, there really is no value to numbers. We give math numbers. We give data value. The value that we give to data is based off of, well, it's based off of what we perceive to be important about the data. If there is no value in a number, then it's just another number. But if there's this key level of support or resistance that the market responds to, that's what we're trying to look for. Now, let's remove this Fibonacci retracement and let's see how we could draw our own lines of resistance. Great, great, great. So now what are we going to do, Eric? We're going to the drawing tool. Remember, we're already on the drawing tool for price level. So let's try to draw our own price triggers for where the stock should go above next. Great, great. So let's look at this. We see 1125. 1120. Let's do 1125 has a key level of resistance for the stock to break through. And make sure you get the exact numbers right, otherwise you might lead yourself to the wrong idea. And we're going to make the resistance red. Great. See, now the stock needs to break above 1130 to get to the next level. And we really want to be more accurate. We can say 1125 just to be more finite and finite. Because you see right here, 1, 2, 3, 4. It crosses through 4 candlesticks. That provides us a lot of support that this line is very held up well. And what's our next line? We could actually see here, this candle touches with this candle at the top of its spike, meaning the shadow, although it traded up at this level, it closed back down within the hollowed part of the candle at around the 995 area to the 930 area. So the stock, although it hit this price, it failed to reject to go above. So we want to keep this as a key level of resistance. And what are we going to set this level of resistance? Let's set it at 1080. 1080 is where we're going to set this price. And remember, always go back to look to make sure that you're doing it the right way when you are pricing this in. And we could show the price on the right. And now look, we see 10.8 and 11.25 are key areas of resistance. Well, Eric, I think the stock's going to go up, but I don't think it's going to go up to 10.8. What's the next closest area of resistance that we can keep in mind? Great question. We're going to look at 10.35. Let's see, 10.35 for the next area. Let's say 10.35 let's see. So you could round a little bit with it. It's give or take off of your perception, and if you want to be more extra finite and serious, but we need the stock to close above its major trading averages from the 10-3 candle as well as the 10-6. Remember, each candle represents 1 day in the trading market. So we see it failed to break above 10.4 two times in the last trading days within the last week. So what we're going to do is draw that as a key level of resistance. And that will be the next short-term resistance level that we're really looking for the stock. And you see here 10.4 is the next level of resistance. So if we get a 10.25 is where it's currently trading, which would be 0.15 move up the scale. And now, Eric, my last question is, where is the long-term resistance on this chart? I am really bullish on this sector as well as oil exploration, and I really believe that the oil market hasn't even seen its next leg up. So where am I going to draw the next level of resistance? Well, that's a good one. That's a great question. What we're going to do is, let's say right around, we're looking for a lot of candles to really line up and provide us an alignment, so that the more candles we have, the better confirmation we have of the price. Important to keep in mind. See, let's see. I like the area of 12.35 seems to be a key level that the stock needs to break above. And also, look, you see the volumes right here. We can kind of align that with the volume. It's important to keep in mind. How does the volume react to price? Now, looking at this, I can see a clear channel trend at 12.75. 12.75. And where am I basing these standards off of, Eric? Well, look at this. Look at this. So we want to put the extension on always. Let's put the price so we know what price we're looking at. Let's see. Where's the candles, Eric? Well, we got one right here, two right here. We got another right there. This one almost touches it, going through these candles, as well as touching this bottom shadow of this candle, which reached a high of over 1350. So we see the stock managed to close down, although it traded at the bottom of this level, it jumped up to this spike to this level. So we want to see this level be the next key area of resistance for the stock to break above. Now, okay, I think it's going to go up to 12, but I don't think it's going to go up to 1275. Eric, what's the next, moderate term of resistance that we should look for? Well, the last one I'll go out with is going to be around, let's see, 12.75. So we want something in the mid 12 range, right? But not above 12.50. So let's find an area that has multiple candles touching at the same point, and we'll see where that lies. So you see it's a little bit of just, measure it up, see where it lines up. And we see, let's just keep it at a roundabout of 12. 12 is a good area where I could see the stock in the next future if this trend of this buy signal on the yearly time frame continues and we see the stock to project higher. So $12 is the next level I'd like to keep out as a level of resistance. And on that note, we can see here that we're able to clearly identify channel trade, and not only channel trade, but understand where is the stock going. Now, let's see how our lines did with the actual Fibonacci. So let's see how we performed in comparison based off the 1 year time frame. And I like to use the 1 year time frame because that really gives us a real overall picture of what we're looking at. The smaller term time frames are important as well, but I feel looking at the 1 year time frame daily gives you the best signals for the most adequate symbols. We see here our lines lined up at 1275, and as well, let's see, at 78% retracement, they got 10.15. And although we didn't get 10.15 as a key level of support, we should note that 10.15 would be another key level of support. So if we're saying, let's say we go long on the stock at 10, let's say it opens up at 10:30 next Monday. Well, where's going to be my stop? If you want to have a clean stop, you can set your stop at 10:15. And 10:15 really signifies a clear level of retracement from the high, which would actually be 78% retracement from the high at 1725. So keep that in mind. If you want to have a tight stop of only 0.15 stop loss, you should set your stop at 10.15. However, another key level we were saying was 9.95 to give you a little bit of cushion in case the stock does turn the other way. Now, with all that said in mind, we can look to a smaller time frame. And let's see, let's try the 10-day, 30 minutes. You see here, it seems to line up with a lot of our projections. And the only other one I would add is 9.4, 9.35, 9.38. But other than that, we pretty much had covered the entire picture. So that's how, looking at a 1-year time frame, although it looks like it's a macro perspective, we can often plot and understand micro trends along with that. And see how I can remove the Fibonacci, and we were relatively good in our setup. So what I'm going to do is I'll create an alert for, let's see, I won't exit the stock unless it goes below. I want it to go below where we set our short-term support lines at 10.15 as well as 9.95. So I don't want the stock, I want to buy the stock below $10. However, we know that in this market, we might not see that level come back to that. So we have to keep that in mind anytime we're looking at this stock. Thank you and have a great day trading, and looking forward to the next week of trading. Let's see how this stock reacts and we'll revisit it next week. Thank you. Have a great weekend.